So another somewhat crappy morning night for the old cryptocurrency investors as Bitcoin doesn't manage to hold $90,000. People are leaving in droves. So many people believe that crypto is over, Bitcoin is dead, and precious metals are where we should be piling our money in right now. I believe it's important to position yourselves where retail and sentiment is not. That's how I've made money in this market, and I'm going to continue to follow that narrative here on this channel. And right now, we do have one good thing that is playing out. There are more shorts in the market, right, than longs. This makes me somewhat more bullish on the market. You can see here, we have almost $10 billion worth of shorts. If you are an avid watcher or a frequent watcher of this channel, you know this is one of the data sets that I use to go into longs or shorts. However, right now, we still do have a lot of longs, but both sides of the team, or whatever you want to call it, are being annihilated. You see, yesterday it was all the shorts, now it's all the longs, but $200 million of longs, $100 million of shorts, totaling $335 million of wrecked. You can see we did get a sharp rejection from the bear flag. Now, this is frustrating, I understand. Like, this is what we were looking at yesterday. Of course, this exact line is a little bit iffy. I think they should be a little bit thicker, but I didn't have time to do that. But you can see here, we came up, we retested it. This is exactly where I drew the line in yesterday's video, and we got rejected, sadly. We came all the way up to 90. I said this line is less important than this resistance, and you can see we actually got rejected by the wick exactly on the $90,000 resistance, and we actually got rejected on the candles exactly at that bear flag resistance, which is frustrating. So right now, all eyes on about 86,000. If that doesn't hold, guys, it's probably going to be downward momentum from here. You can see bear flags, they tend to end quite nastily, but you can see here, this is a similar, you can kind of see a similar pattern forming up here. You can see we didn't lose the previous low here. We just held above it, right? And then we went up to new all-time highs. So in technical, in my terms, what I'm looking at here is for these candle bodies to close really above 85,004. We're very, very close, right? We're very, very close to these regions. If we do lose this, probably it's likely to come and touch this liquidity zone, low 80s, and then we've got the mid 70s. And guys, one thing to pay attention to, right? Everyone, including myself, likes to look at Bitcoin's drawdowns in simply percentage terms. 77% was the last one. I think it was like 88 or so percent in the 2017 crash. Yeah, 88. So going down by a margin of 10. So we could argue that we're expecting maybe a 66% drop here if the bear market does continue to 42,000. But I think one thing that's important is looking at the price action. As you know, I like simple support and resistance. Of course, the last high here is going to be a very strong support zone. So if we put in just a horizontal line right there, we can see that it was a big resistance here for the first time we broke above it. And this is where we want to look, because you can see here, the previous one, that was almost the exact bottom. We did wick below it. 17 to 19,000 was the high, right? What, I think it was 19, yeah, 19 to 17,000. But we came down to retest that exact zone. A lot of people said, well, we can never go below the previous high. We did. It was a very short period of time, and everyone thought crypto and Bitcoin was totally dead there. And that was the best ever buying opportunity in the recent history of Bitcoin. Remember, no one who's bought Bitcoin in the last 4 years and held it for at least 4 years has lost any money, right? But so we can see from this that that could be what plays out. So if we lose this bear flag, right, I would say the scenario is looking more and more likely that we retest previous highs, probably having a wick below it, grabbing liquidity in this zone. Perfectly fine, guys. From where we are right now, that's between a 22% and say a 30% drop. Is it really that bad? Is that really that scary? Now, if you can't sustain at least that bare minimum 20 to 30% more down from where we are right now, don't buy any crypto. But for me, seeing the world as it is right now, the investment landscape, the assets, all of that, gold and silver going parabolic for yes, but these things are happening while the stock market all-time highs, right? The only thing that's lagging behind is crypto. And like I said yesterday, I believe that this is simply because of the price action, and couple the price action, so bad sentiment, so people are scared, coupled with the fact that the October 10th liquidation event was something that only happened in crypto. It wasn't a worldwide economic event. It was a crypto event. It showed the cracks. It showed the gaps where large exchanges were doing probably maybe the wrong thing, or whatever, however you want to call it, manipulating, whatever. They were caught off guard, right? And so they're still picking up the pieces. So couple that with bad sentiment, the market is not looking at Bitcoin as a safe haven asset in market uncertainty. But they are looking at the S&P 500, for example, the NASDAQ. These are all at all-time highs. It doesn't make sense to me, right, that Bitcoin isn't classified on a smaller scale, like a smaller capital allocation scale. For example, if 50% of someone's portfolio is the S&P 500 and 25% of it is gold, 5, 10, 15, 20% makes sense to me to have Bitcoin, right? And I think the market will digest that and do that. But maybe that happens after this sort of correction, the normal correction. Again, I say normal because if you can't sustain that, guys, this isn't the market for you. But if you can sustain that, then you get the opportunity to have the gains. Like the people right now who just saw a 700% move, right, for Bitcoin. Like myself, people who saw from the bear market before for just Bitcoin, a 2,700% move, right? And that was for Bitcoin. Think about the altcoins, right? These people right now are not the ones panicking. We see this in the short-term holder charts, right? Most people in a loss. The highest losses right now, which is actually quite a substantial amount, is from people who are buying the highs. Now, a small percentage of the people who bought these highs will listen, they will learn, and they will realize that just simple DCA over time with extra money you make monthly from your income into assets is what wins over the long term. Day trading, trying to revenge trade, high leverage trading, all of that doesn't work in the long term unless you are sitting here practicing a strategy every single day, 12 hours a day. Other than that, my opinion, dollar cost averaging assets you believe in is what we've seen, tried and tested, worked, especially buying when the rest of the market is scared. It's never been a perfect time to buy at all-time highs. However, if you bought at all-time highs 4 years ago, you would still be in profits right now. And subscribe to see the next one, and I'll see you